Hi, my name is Natalie Domingue, and I'm the Financial Literacy Coordinator at Atwater Library. The Financial Literacy Program at Atwater Library is funded through Canadian Heritage. Today I'm joined by Lynn Bennett, Certified Financial Planner, who is here to give a presentation on income tax for the 2019 tax year. Thank you, Lynn. Take it away.
Thank you, Natalie. Hello, everyone. I'm Lynn Bennett, and I'm going to go through with you today a presentation that I originally gave at Atwater Library in early February. So we'll just run through the slides, and I'll tell you a little bit about some of the changes that are very recent. So first of all, please remember that the contents of this session are for information only. This is not tax advice or personal financial planning advice. If you do need advice relevant to your own situation, please consult an accountant or a financial planner or a notary or any other professional that would seem appropriate for the question that you have. So the first thing I want to mention, because this is quite a big change, and it's a result of the current situation, pandemic situation that we're in. Both tax authorities that we file with as Quebec residents have changed the deadline. So the new deadline to file your taxes for 2019 is June 1st. Normally it's April 30th. This year, it's June 1st, so that gives us about an extra month to file, but that deadline is coming up soon. And there is also a new deadline to actually pay any taxes owed for the 2019 year, and that new deadline is September 1st, and that includes any installment payments that you're required to pay normally by June 15th. So that deadline for the June 15th installment has also been moved out to September 1st. Something else I wanted to mention, and this is a brand new benefit that was just announced today, if I'm not mistaken. There's a new benefit for seniors that is $300 to $500, and it's non-taxable. It's a one-time payment that will be available to recipients who are currently receiving the OAS or the GIS. From what I gather from the limited information available so far is that if you receive OAS but not GIS, you get a $300 payment. And if you receive OAS and GIS, then you get a $500 payment. There's no application necessary, so it'll just be automatically taken care of. And the reason given for this new benefit is to offset added costs that seniors are experiencing due to the pandemic. So I'm really glad to be able to tell you about that today. It was really just announced this morning. So let's get started, and I like to start with this tax tip, just for put a little bit of amusement in it. We all must pay the taxes that we owe, but there's no law that says you have to leave a tip. And I found this as it was an advertisement. Basically, what we're trying to say here is that you don't want to overpay your taxes payable. We all have to meet our obligations when it comes to income tax, but if we keep well informed and do it properly, then we don't end up paying the government a tip. So that's something to keep in mind. The goals, I'll just sum them up quickly. I would say the first one is to stay informed. Make sure you're keeping track of changes that might apply to your tax situation. And there are lots of changes that come through each year because of budgets or because of government changes that adopt different policies and stuff. So it's good to keep in the loop on what's coming, what might impact your tax situation. So the goal is to maximize everything that you're entitled to. So you maximize the benefits, the deductions in your taxable income, and you maximize the credits that you may be eligible for. At the same time, this will help you minimize what you want to minimize is the tax that you pay. So those are the aims. Stay informed, maximize what you're entitled to, minimize what you have to pay. So today we'll be running through these few things. Where do you find tax information? How are taxes calculated? We'll walk through some of the credits that may apply to you. We'll look at a few tax filing alternatives. On paper is not the only one. And we'll take some questions. I believe Natalie at the end will give you some information about what we'll do about questions. So first of all, you're probably familiar with the paper tax guides and forms if you already use them. They are available from, the federal forms are available from Service Canada offices, and the Revenue Quebec ones are available from the Revenue Quebec office. There are two main locations downtown. Given the current situation, it's probably, if you haven't received these documents already, it's probably more desirable to order them online. The federal forms used to be available at Canada Post, but are no longer. And the Quebec forms used to be available at Desjardins Bank branches, but I'm not certain if they still are. Of course, there's online and phone support. Both tax authorities provide really lots and lots of information on their websites, and there are also telephone numbers to call. As you can imagine, the closer we get to the deadlines, the busier these phone numbers get, of course. So use the websites as your first plan of attack for looking for information. I also want to mention that each of the tax authorities also offers a My Account feature where you can register and set up your own account on each of these websites, and then you can view any tax forms that have been submitted to the government from financial institutions or employers and that sort of thing. You can also set up a direct deposit so that any tax refunds or certain benefits can be paid directly into your bank account. I recommend this My Account feature because not only can you see your tax forms, but also your tax history, returns, assessment forms, information about RSP contribution room, lots and lots of great information is kept in your account. So this is really something to look at, and I recommend it. There are some other government websites that may be useful. There is Retraite Québec, which was formerly called the Quebec Pension Plan website. This is particularly interesting for people who are retired or about to retire. Also, another feature that you probably are interested in is the Quebec Health Insurance and Prescription Drug Plans. That's the RAMQ, and they also have a website with lots of information in English. And again, another great place to find great information is in the financial media. So I've just listed a few of the journalists here that I like to follow. So at the Globe and Mail, we have several, but these are the two I follow. The Montreal Gazette has Jamie Gollenbeck, who I believe works for one of the big bank brokers. In La Presse, if you prefer in French, there are a couple of people I follow. Money Sense is a great website, lots of really interesting information. Tax Tips as well. The website itself is a little quirky, but some really great up-to-date information there. And a lot of the banks and the large accounting firms also put out FAQ sheets, question and answer pages, information about various subjects. So keep an eye out for those as well. I see here, to see the list, I've provided to the library a list of links that you can browse through and try out. If you would like to have more of information about journalists and online information. You can ask the library for that document, and then you'll be able to access all those links. Okay. So how are taxes calculated? I won't spend a whole lot of time here. I just think it's interesting to understand how exactly the governments are tallying up how much tax we need to pay. So some of the buzzwords that you're probably familiar with, but perhaps are not clear on what they mean, are total income versus net income versus taxable income. So we'll run through what those mean. The difference between deductions and credits, and tax rates and tax payable. And also when we're talking about credits, some are non-refundable and some are refundable. And you've probably heard those terms, but we're not quite sure what they mean. So we'll run through those. And first, before we get into that, a little bit of the good news. So this is the types of income, these are the types of incomes that are not usually taxable. So the guaranteed income supplement, GST and solidarity rebates, strike pay, scholarships, child support payments received, anything you withdraw from your TFSA, and any income you earn within your TFSA is completely non-taxable. Generally, life insurance payments paid to beneficiaries are not taxable. Lottery winnings are not taxable. Cash gifts received are not taxable, and inheritances. So that's a bit of the good news. What's not taxable? So let's talk about total income, which is the first thing that gets calculated in your tax return. It basically includes all of your income that you've received, including income from foreign sources. So these may be employment, business income, pension income, say from your RIF, RSP withdrawals, investment income, rental property income, employment insurance benefits, any capital gains, spousal support. Basically, anything that's income gets recorded as part of your total income calculation on your tax return. And on some of these slides, I've provided the line numbers in the tax return. So if you want to locate them, that'll give you a little bit of a hand there. So the next type of income is net income, and it's basically the total income that we just calculated minus any deductions that you're eligible for. Net income is an important one because it often determines eligibility for certain benefits and credits. So some of the things that we can deduct from total income are contributions that we've made to RSPs, the split pension amount that we'll talk a little bit about later on, any expenses we've incurred to manage our investments, professional and union dues, childcare support payments, anything we've paid into the government pension plan. So those are all deductions from total income and reduce our income that's taxable. Oops. And there are the line numbers. Okay, so the third figure that's important on the tax return is your taxable income. So the net income that we just calculated, when we subtract a few other deductions, we come up with our tax payable. So some of those deductions are probably not applicable to very many of us, but there are a few deductions that might be there. And then, so this taxable income figure is what we use to calculate the actual tax payable. And there are the line numbers. Okay, so let's calculate that taxable income. So this is what it looks like. We tally up everything in our total income. We get net income when we subtract our deductions. We get taxable income. We get from our net income minus the rest of our deductions, and then we can proceed to calculate the tax bill. So this is what we all want to do. We all want to reducing income to reduce the taxes payable, reducing income that we report, or reducing taxable income so that we can reduce the amount of tax that we do actually pay. So let's have a look at some of that. So there's the pension income credit, which many of you are probably familiar with already. Certain types of income are eligible for this credit, which reduces the amount of tax to pay. So income that's eligible for this credit includes pension payments from formal pension plans like employer plans, or withdrawals from RIF plans, in some cases RSPs, the split income, and sometimes annuities. So what's generally not eligible for the pension income credit are any of the government plans. So not the QPP and not the OAS and those. Another type of method to reduce the taxes payable is to use a QPP sharing. So this is something that you can set up actually with Retraite Quebec, where the payments are actually split before they are sent out to the members of a couple. So one of the requirements is that both people have to be at least 60 years old, both spouses, and they both must already be receiving the QPP. Another one that you're probably familiar with is the pension income splitting. Now, this doesn't actually involve any exchange of money or handing over of money. It's basically just an accounting method on the tax return. So up to 50% of eligible income can be declared on the tax return as belonging to a spouse. On the Quebec return, you must be at least 65 to be able to use this. And the income involved must be eligible for the pension income credit that we just previously spoke about. You can also go back in time and amend tax returns of previous years, up to 3 years, if this is something that you haven't been taking advantage of and you would like to for previous tax years. So a few other deductions. You're probably familiar with RSP contributions, support payments made, expenses to earn income. There are others that you can see in these lines in the tax returns. So let's calculate the actual tax payable. So as you're probably aware, there are a set of tax rates that are, once you get this figure, the taxes payable, there's a table of tax rates that are applied to it to come up with your taxes payable. And this number is before your credits are applied. And we're going to talk about credits in a bit more detail. So a tax credit, it doesn't reduce the income, it reduces the tax payable. So you have to have a tax payable to use most of these credits. So let's have a look here. So your taxes payable minus the credits that get applied, minus any taxes that you've paid during the year. Now this includes installment payments or taxes that were withheld, for example, when you did your RIF withdrawal, or taxes that were withheld on your paycheck. All those are taken into account when the final tally is done up on your tax return. So then we come up with our end result. It's you either get a refund from your tax return filing, or you have a balance due to pay. So basically, if the tax payable calculation comes up with a number that's greater than 0, then you have a balance to pay. Normally that's by April 30th, but as we were saying earlier, this year, exceptionally, it's September 1st. If the tax payable is less than 0, then you get a refund. So reduce your taxes payable. Use all the credits that you're entitled to. So now we'll look at a few of those. Actually, we'll do a recap first about deduction versus credit. So what we've said is a deduction is something that's subtracted from your total income. So it reduces your income before the tax payable is calculated. A credit reduces your tax payable after the tax payable is calculated. So what that means is if you don't have any tax payable, sometimes credits are not usable. or sometimes they can be pushed forward to a future year, but sometimes they're just lost if you don't have any tax payable. And there are two types of credits. There's the refundable credit, which is basically like a rebate. And an example of that one is the GST tax credit. And the other type of credit is a non-refundable credit, and this is subtracted from tax to pay. So if you don't have any tax to pay, sometimes you lose this credit, sometimes you can push it ahead to a future tax year. So now we'll have a look at some of the common credits that you may be eligible for. So this one, the basic personal amount, is available to anyone of any age. The second one, there is an age amount credit for taxpayers who are over 65. There's a living alone credit. This is Quebec only. So the first one, the basic personal amount, and it isn't means tested. What that means is everyone gets it no matter what their income level is. So for 2019, the federal basic personal amount is approximately $12,000, and the Quebec amount is approximately $15,200. So what this in effect means is this credit eliminates the tax on that amount of income, that first amount of income. So for your first $12,000 of taxable income on your federal return, there's no tax to pay. And on your Quebec return, for your first about $15,000 of taxable income, there's no tax to pay because of this basic personal amount credit. And there are the line numbers. The next one is the age amount. Both the CRA and Revenue Quebec offer this one, but it is means tested. So over a certain threshold, this credit diminishes and diminishes until a maximum amount. I don't have those numbers here, but it's automatically calculated. It's not something that you need to calculate yourself on the tax return. A Quebec only credit is the living alone if you're eligible, and living alone means really living alone or you're a single parent. It's different from the living alone part of the solidarity credit, and it is also means tested. But this is an important one to check if you are living alone. So let's talk about some of the credits for depending on your situation. This is one that's quite interesting. It used to be called the Experienced Worker Credit. Now it's called the Career Extension Credit. It's basically the government trying to encourage older workers to stay in the workforce. In 2015, the minimum age to qualify for this credit was 65. Now it's age 60. So what the government is really trying to encourage people to stay in the workforce. One of the ways they're doing that is by reducing the age limit that you can take advantage of this credit. To qualify, you need a minimum income of $5,000 from employment. The maximum credit you can receive is $1,500 to $1,650 in 2019, depending on the situation. So the home buyer's credit is also an interesting one. The maximum credit from the CRA is $750 for a qualifying home, and Revenue Quebec approximately the same number, and it can be split between homeowners. The reason why I mention this here is because there have been some cases that have come before the courts where it's become clear that a surviving spouse may be eligible for this credit when the marital home becomes theirs because of an inheritance, or you acquire a new home following the death of the spouse. So this $750 credit you may be eligible for this even if you aren't what you think is a first-time home buyer. So that could be interesting to look at. I will take a couple of minutes to talk about the GST and solidarity credits, because these are interesting because they are refundable credits, meaning they're like a rebate. They will be paid, if you're eligible for them, they are paid to you regardless of if you have any tax owing. A lot of the students that I do presentations for are eligible for these as well. So it is a refundable credit. Refundable credit sort of means a rebate. This is the federal tax credit, the GST tax credit. It's basically a rebate for all the GST that you've paid for your purchases during the year. It's aimed at low to middle income taxpayers, and the basis for the calculation is your income and your family situation. So how do you access this? There's no need to apply for it. It's calculated by the CRA when you file your tax return, and no receipts are required. You don't need to keep track of every purchase and how much tax you've paid. The basis really is your income and your family situation. So Quebec has a similar but a bit different tax rebate. So it is also a refundable credit, which I like to call a rebate. And it rebates two tax types. So the sales tax in Quebec, which is similar to the federal, but it also aims to rebate municipal property tax for people who are eligible. And not only property owners, but also renters. So if you are a renter and your name is on the lease, you get an RL 31 form from your building owner. And that form you can use to apply to your solidarity application on the Revenue Quebec tax return. If you are a property owner, you can use your tax bill information to add to it. Now, just to be clear, you can still access the solidarity tax credit, the sales tax portion without without the municipal property tax. You'll still be able to get something back. It's just that if you are able to provide an RL 31 or a property tax bill information, there's a little extra in it for you. So again, like the federal one, it's aimed at low to middle income taxpayers. It's based on income and family situation. The Quebec rebate also allows a little bit extra for taxpayers who are living alone. And then how do you access this? It is calculated by Revenue Quebec when you do your Quebec tax return. If you would like to look at the document, it's Schedule D of the Revenue Quebec tax return. And like the federal, no receipts are required. So let's look at a couple more credits. The Renault Vert credit you may have heard of. It's basically to help property owners who are doing renovations that are eco-friendly. So the deadline for this was extended to March 31st, 2019. You'd have to have a contract signed by that date. And it's quite a good credit. It's 20% of the expenses over $2,500 up to a maximum of $10,000. And that's a Quebec only credit. There's also a municipal tax subsidy credit that you may be eligible for. It's a little bit tricky to qualify for it, but this credit was put in place to try to help seniors who have seen their municipal tax bills rise larger than the average in the areas where they live. So that's line number 462 on the return, number 29, something to look into if you're in that situation. So medical expenses is from what I've read, the number one credit that people don't take advantage of. So it's a little bit of calculation that has to happen to apply for it, but it can be worth it. So what you can do is you total up all your medical expenses. We're talking about expenses that have not been reimbursed by any insurance plan. So anything that was not covered by an insurance plan, and it's nearly any medical expense. There are very few things that are excluded. So you can total up all those expenses for you, your spouse, and any dependents. And this is how it's calculated. The credit applies to the excess of 3% of your net income or a specified limit. So what that means is, say for instance, you have $5,000 worth of medical expenses. The part that will be eligible for the credit, there will be 3% of your net income subtracted, or a maximum of $2,400. So they kind of take out a little chunk before they let the rest of it be eligible. Generally, the spouse with the lower income would claim this credit because you'd get a better advantage with it. And the credit itself is 15% of those eligible expenses. And this is something that a lot of people miss. The RAMQ premium, the yearly premium you pay for the Quebec Drug Insurance Plan, it is an eligible medical expense. But on the federal return, you must claim it on the following tax year only. So that's what I mean by this one is a bit, you have to put a little bit of work into getting this credit. It's not a huge credit, but if you may have a year when you do have significant medical expenses and you'd want to take advantage of this credit. So that's the federal one. And there are the line numbers. The Quebec medical credit is less generous. Again, you can total up all the expenses for you and your spouse and your dependents, but it's 3% of net income of the family is subtracted before the remainder becomes eligible for the credit. So, and this is family income. So that means if you're in a couple, it means net income times both people. And there's no specified cutoff point. So this one is harder to be eligible for. The credit is a little bit more. It's 20% rather than 15. The RAMQ premium also is eligible, but on the current Quebec tax year. So if this is something that you think you're eligible for, do keep track of your medical expenses. You can get, normally you can get annual tallies from your pharmacy or from your health insurance provider can give you an annual summary of what they paid for versus what you paid out of pocket. And those out of pocket expenses are what becomes eligible for this credit. So it takes a little bit of work, but these credits may be interesting for you. There are other credits, particularly for people with disabilities or have health issues. So if you've done renovations to accommodate a disability, like ramps or that type of thing, there's a maximum $1,250 credit for that. That's the federal one. There is on the Quebec side a home support services credit. So what this means is you can get a credit for, the minimum age is 70 on this one though. You can get credits for expenses that you've paid for services such as snow removal or house cleaning, nursing, all sorts of things like that. And the independent living credit, also minimum age of 70. This is a Quebec credit, and it's 20% of expenses less $250. And these are things like devices and appliances, things like that for people with health issues or disabilities. The seniors activities credit is not a huge credit, but it's a way of getting a little bit of money back on any of those activities that you may have signed up for. And this does include things like yoga classes or sewing classes, bowling fees, anything physical or cultural. Covers off a lot of different things. You definitely need a receipt for it. Not a huge credit. Could be interesting. And this is another one, the senior assistant credit. This is for for low income families. So about $36,000 for a couple, $22,000 for a single person, minimum age 70. So, but there it is, and these are the maximum credits, about 400, about 200 for a single, no need to apply, automatically calculated in your tax return, and this is a Quebec credit. Caregiver credits as well. This is something that the governments have been expanding over the last years. So there are all sorts of respite care, or if you're caring for someone who has a mental or physical disability, it can be a spouse or an other dependent. So there are some financial relief packages out there for this type of disability caregiving. Generally, to qualify for disability benefits and credits, there are, of course, forms to have in place. So these are generally provided by a medical provider, a doctor usually. And these are the lines. So the federal form is a T2201, and the Revenue Quebec one is a TP358. So that's it for credits. We'll look at some tax filing alternatives. I just wanted to run through this because while I've been doing the presentation, some people tell me they file online, and some people tell me that they file with paper copies. But I just wanted to run through what some of the alternatives are. So certainly one of the alternatives is paper filing by postal mail. This is certainly still available and can be done. The governments have been favoring electronic filing of taxes and trying, well, I wouldn't say actively discouraging, but they do publish turnaround times, for instance, for filing by postal mail, and they sometimes say it can take up to 8 weeks to get a response versus 10 days with an electronic filing. So certainly they are encouraging electronic filing. This is still available, of course, can take much, much longer. So again, this is the online software option. There are lots of third-party companies out there that offer software where you can file your own tax return online. In Canada, unfortunately, the governments don't supply their own software to file returns, so we use third-party softwares, companies that have developed specialty software to do that. Another option is you can assign a representative, a trusted person, a relative or a friend or someone who would like to take on this task for you. There are some signatures to supply, but you can set this up with the government to assign someone to file your tax return for you. And of course, there's the professional tax filing using an accountant or a tax filing service. Could be a good option if you have a complicated tax situation. And the last is the volunteer tax filings. There are some services in Montreal. They tend to be geared towards particular income brackets or particular groups that speak a particular language, or perhaps over a certain age, or single parents, for instance. So they tend to cater to specific demographics. The CRA offers a list of volunteer tax filing services that they approve in the Montreal area, so you can find that on their website. So we're back to our tax tip. You have to pay your taxes, but there's no law that says you've got to leave a tip. So again, what I'm trying to say here is stay informed. Make sure you know what you're entitled to. Look at the government websites and have a look at the journalists, or talk to your entourage around you. Ask questions. Make sure you know what you're entitled to, so that you pay the minimum taxes possible. So this is the time where I pass back to Natalie.
Thank you, Lynn, for joining us today. This has been It's help for a lot of our members.
My pleasure.
Yes, especially mentioning all the new credits that just came out on May 12th. That's going to help a lot of people. So we mentioned that if you have any questions, you can simply just contact us at the library, and I'm going to go ahead and show you that right now. Here we go. You can simply just email me, Natalie, at atwaterlibrary.ca, or call the library and it'll get directed to me. And we will certainly do our best to point you in the right direction. Thanks again, of course, to the Government of Canada, Canadian Heritage, and thank you to Atwater and everybody who's helped along with making this video. And especially thanks to you, Lynn Bennett, once again.
Thank you.
Thank you.